The corporate earnings season is drawing to a close with over 86% Nifty companies having reported their earnings. While most of the companies continue to post strong show on top line, margin pressure is getting evident for the broader universe and the earnings breadth also seems to be deteriorating. Let's do a three-point analysis on how has the second quarter panned out for India Inc. 1. What does Q2 number crunching tell us? Well, the aggregate sales of the group of 1746 companies shows a year-on-year growth of 21% as against 15.4% reported in the previous quarter and about 9% in the year-ago quarter. However, operating profit failed to keep pace, with EBITDA growing by 13% year-on-year in the quarter under review as compared to a growth of 15.4% in the year-ago quarter. Input cost pressure is also being absorbed by companies as the demand environment is weakening. Now, this could be an early sign for an impending slowdown and warrants a close monitoring. The growth in profit after tax was to the tune of about 10%, much improved as compared to year-ago quarter, which saw 4% growth in the profit for this group. Now, this profit figure may be misleading to draw a conclusion because of several one-off adjustments below the operating performance line. What is pertinent to note is that the number of companies reporting losses in the quarter actually rose to 465 companies. That is close to 27% of the group, which is a significant increase over 348 companies seen for the same group in the immediate preceding quarter. 2. How have the Nifty companies performed? Well, 43 Nifty companies have reported earnings with few hits. The aggregate sales growth for this group was a healthy 24.4%, which is improvement over 9.7% in the year-ago quarter. The growth in operating profit was much weaker at 10.6% as compared to 16.8% in Q2. There was a significant erosion in operating margin, down 180 basis points year-on-year at 14.4%. 3. Who were the winners and losers of Q2? Well, the winners from the Nifty pack were few and far between. The results that caught our attention were banks like SBI, Axis Bank, ICICI Bank with much lower slippage. In the financial pack, Bajaj Finance stole the show with good growth in assets, margins and a stable asset quality. Adjusted for one-off, Zee Entertainment also reported a strong core performance. Novelis aided the performance of Hindalco, and despite rising cost pressure, JSW Steel posted a strong show. The other strong performers were GAIL and ONGC, and capital goods companies mostly had a much better quarter. The likes of ABB, Cummins reported satisfactory numbers, and the same positivity was also seen in the sector bellwether Larsen & Toubro, that reported a robust execution and strong order intake. The other sector worthy of mention was paper, that appears to be riding on multiple secular and strong tailwinds. Most of the IT companies also reported inline numbers, and pharmaceutical sector overall continued to remain uninspiring. On the losing side, margin pressure impacted numbers of most of the cement companies. Auto companies like Bajaj Auto and Hero also bore the brunt of rising input prices, and Vedanta's subdued numbers reflected input price pressure as well as lower zinc volumes. Lower gross refining margin and forex loss impacted profitability of downstream oil companies like HPCL and BPCL. And in contrast to the past, Yes Bank saw asset quality pressure. IndusInd Bank too took a one-time provision hit on account of exposure to IL&FS Group. The only Nifty company to have reported a loss in the quarter was Tata Motors, weighed down by poor show of Jaguar Land Rover, especially in the Chinese market.